What if I told you that your obsession with finding the perfect trading strategy is the very thing holding you back? You see, most traders don't fail because they lack technical knowledge. They fail because they lack consistency in thought, in behavior, and in execution. In this video, we're going to expose a psychological truth that most never hear, that your edge isn't in the strategy you use, but in how consistently you can follow it. So if you're tired of losing trades, emotional roller coasters, and constantly second-guessing your methods, stay with me. This might be the mindset shift that finally sets you free. When a new trader enters the world of financial markets, the very first thing they start looking for is strategy. They type things like, best intraday strategy, 100% win rate system, or profitable Forex strategy 2025. They join signal groups, watch YouTube videos, buy expensive indicators, and truly believe, that success lies in finding the right method. But this belief is an illusion, not because strategy doesn't matter. It does, but because strategy without execution is dead. Let me give you a truth backed by years of trading psychology. Even a mediocre strategy, if executed with high consistency, will outperform a perfect strategy that's followed inconsistently. Read that again, slowly, because this is where most traders lose themselves. You see, the reason traders jump from one strategy to another isn't because their system doesn't work. It's because their emotions prevent them from following it long enough for it to work. They take a few trades, hit some losses, panic. They tweak the system. They doubt themselves. They start chasing price, entering earlier than planned or exiting before targets hit. And every time they change the plan mid-trade, they break something much more important than their strategy. They break their trust in themselves. This creates a vicious cycle. No consistency, no data, no confidence, more randomness, more failure. Eventually, they don't know whether the system was wrong or they were wrong. And here's where psychology steps in. The need for certainty, the fear of being wrong, the impulse to control every outcome. These are emotional patterns that override logic, that override strategy. Let's be honest. How many times have you had a solid setup, but you hesitated and missed the entry? Or maybe you entered, but closed early because of fear? Or moved your stop loss just to give it space, and lost even more? That's not a strategy problem. That's a consistency problem. True traders understand this early on. They stop searching for magic systems and instead focus on the boring part, executing one plan over and over like a machine. Because when you do something consistently with discipline, you begin to gather real data. That data builds feedback, and feedback builds confidence. Confidence doesn't come from how fancy your chart looks. It comes from seeing the same behavior repeated, tracked, and understood, win or lose. And here's the irony. Most people want freedom through trading, but they don't want to submit to the discipline it demands. Trading will not give you freedom until you become a slave to your own rules. That sounds harsh, but it's the truth. It's only when your rules are followed with robotic precision that you begin to develop trust. Not in the market, but in yourself. And this self-trust becomes your real edge. Because no matter how volatile the market gets, no matter how seductive a breakout looks, no matter how scary a losing streak feels, you know your job isn't to be right. It's to follow your system one trade at a time, no emotion attached. This is where the average trader breaks down and where the 1% begin to rise. They're not chasing every candle. They're not switching methods every week. They're not gambling on hope. They pick a setup, define risk, plan the trade, and execute every single time, without hesitation, without panic, without attachment. This isn't just skill. This is a psychological state. One rooted in emotional regulation, pattern recognition, and long-term thinking. You might say, but what if my strategy is weak? Then improve it, but don't abandon it mid-trade. No system is perfect. Every method has losing streaks. But what separates the consistent trader from the gambler is that the consistent trader knows the outcome doesn't define the process. They aren't trying to win every trade. They're trying to execute their plan over hundreds of trades, because that's where the real edge lives, in repetition, in emotional neutrality, in data-backed execution. So ask yourself, do I really need another strategy? Or do I need to finally commit to the one I already have? Because in the end, the strategy is the map. But consistency, that's the vehicle that gets you there. And without it, even the most accurate system in the world will get you lost. Most traders think their success lies in the tool set: indicators, patterns, signals, and technicals. They believe that the key to profitable trading is hidden inside a chart setup, that one magical combination of RSI, MACD, Fibonacci, and moving averages that will unlock consistent profits. They don't realize this. You can hand the exact same strategy to 10 different traders, and only one of them might come out profitable. Not because the other 9 were using bad tools, but because the one who won had something far more powerful than an indicator: discipline. Discipline is invisible. It doesn't flash on a chart. It doesn't look impressive in a screenshot, but it is the backbone of every real edge in trading. Let's look at what actually happens when someone enters a trade. You see a setup, maybe a clean support level, a bullish engulfing candle, an oversold RSI. The chart looks good. You enter, but the candle moves against you. Suddenly, logic disappears. Your breathing changes. You stare at the screen as if looking harder will make the price reverse. Now what do? Do you close early out of fear? Do you double down out of frustration? Do you remove your stop loss because price might come back? This is the moment where your real edge is revealed, not when you enter the trade, but in how you behave when uncertainty arrives. Because uncertainty always arrives. Every trade is uncertain, and no indicator can protect you from your own lack of discipline. The truth is, indicators are tools, not guarantees. They are interpretations of the past, not predictions of the future. But your brain doesn't want to hear that. It wants certainty. It wants comfort. So it clings to the illusion that if it just finds the right indicator, it can avoid the pain of loss forever. That illusion is seductive, and it's the reason most traders never grow. They keep switching tools. They keep tweaking strategies. They keep blaming the method, when in fact, the issue is internal. Discipline is what allows you to stick to your plan when the market becomes emotionally chaotic. Discipline is what makes you take the same entry even after 3 losses in a row, because your system still shows edge. Discipline is what stops you from taking random trades out of boredom, revenge, or fear of missing out. And most importantly, discipline is what keeps your losses small and your account alive, because survival in trading is underrated. Everyone wants to get rich fast, but no one wants to protect their capital slowly. Here's a psychological truth. The brain is wired for impulse, not discipline. We evolved to react quickly to threats, to chase pleasure, to avoid discomfort. And trading triggers all of these instincts simultaneously. That's why most people fail. They don't fail because they can't read a chart. They fail because they can't sit still when the chart moves. Discipline must be trained like a muscle. You don't wake up with it. You earn it by repetition, by doing what you planned, even when every part of your body says, abort. And this is where the edge lies. Because in the long run, it's not who has the smartest analysis. It's who can consistently follow their own rules that wins. Let's say you have a strategy with a 55% win rate and 2:1 reward to risk. Statistically, you only need to execute this properly over a large enough sample size, let's say 100 trades, to see significant profit. But what if you break the plan after 10 trades? What if you change position size impulsively? What if you start skipping entries because of fear? You'll never reach the data threshold to validate your edge. So the edge never had a chance to express itself. Not because it didn't exist, but because your discipline didn't allow it to breathe. People spend so much time trying to outsmart the market. They forget the real battle is not with the market at all. The real battle is internal. It's the quiet resistance you feel when your setup appears during news. It's the tension in your stomach after a losing streak. It's the voice that says, just one more trade, after you promise yourself you were done for the day. Indicators don't fight that voice. Discipline does. The market doesn't care about your indicators. It cares about your ability to stay rational when everything gets emotional. You may not be able to control what the next candle does. But you can control whether you follow your plan. And that is your true edge, because over time, with repetition, this discipline becomes your identity. You stop reacting. You start executing. You build data. You gather emotional strength. And eventually, you become consistent, not because a market changed, but because you did. So before you add another tool to your chart, ask yourself, do I need a better indicator or do I need better discipline? Because the edge you're searching for has been in your behavior all along. And the trader who controls their behavior controls their outcome, even in chaos, even in drawdown, even when nothing makes sense. Because they know the real edge isn't in the screen, it's in the mind. Everyone wants the big win. They want the $500 trade, the 10x overnight return, the I turn $100 into $10,000 in a week kind of story that makes headlines and screenshots go viral. But no one talks about what it costs to chase that. No one talks about the damage left behind after those wild trades collapse. Because collapse is almost always the ending. In trading and in life, the ones who win consistently are never the ones chasing the biggest highs. They're the ones who understand the power of small, controlled, repeatable wins. The ones who realize that growth, real, sustainable growth, is a result of compounding, not gambling. Let's say you make just 1% a day. Doesn't sound exciting, right? But let that 1% stack. Let it repeat not just today, but tomorrow, then the next day. In a few months, you're up 100%. In a year, you're a completely different trader. Why? Because you respected the process. Because you understood that the goal isn't to win big once. The goal is to not lose big ever. That's the truth most traders avoid. They want fireworks, not discipline. They want adrenaline, not accuracy. But this market doesn't reward excitement. It rewards consistency. There's a reason casinos are always profitable. They don't chase jackpots. They run the numbers. They let the math do the work. And slowly, almost invisibly, they drain those who try to beat the system emotionally. And traders? Most of them are behaving like gamblers inside their own minds. They break risk rules when they feel behind. They double up on losing trades, hoping to get even. They increase position size when they feel lucky after a win. They call this intuition. But it's not intuition. It's emotional self-sabotage in disguise. And it's the exact opposite of compounding. Because compounding only works with control. Control over greed. Control over fear. Control over boredom. Because boredom, too, is a dangerous enemy. Many traders can follow their system for a week, maybe two, but the moment it feels slow, they break it. They force a setup. They take a wild trade just to feel something. And in that moment, in that single deviation, they burn weeks of progress. Gone. Not because the market changed, but because they did. So here's the paradox of trading. The more you chase intensity, the more fragile your account becomes. The more you accept simplicity, the more powerful your growth becomes. The trader who takes a 2% profit consistently is often laughed at by the one chasing 50% flips. But look at their accounts 6 months later. The wild trader is usually blown out, and the boring, disciplined trader is funded, scaling, and sleeping better. Why? Because one treated trading like a profession. The other treated it like a casino. Ask yourself honestly, do you want to feel excited or do you want to feel safe? Because both don't coexist in this game. Safe traders survive, and survival gives time. And time, combined with repetition, creates exponential growth. One of the most misunderstood concepts in trading is this: the size of your win does not determine your success. The repeatability of your win does. If you can make 1R consistently, you have a system. If you can repeat it 100 times with discipline, you have a career. But if you make 10R once and then blow it all chasing the next, you don't have an edge. You have a story, and stories don't pay the bills. So here's what's really happening when you focus on small wins. You're training your nervous system to operate without chaos. You're conditioning your brain to trust long-term results over short-term thrill. You're separating your identity from your outcome. And eventually, you stop needing to prove anything to anyone. You stop needing the market to validate you. You're not chasing anymore. You're building, trade by trade, day by day, quietly, humbly. Because the truth is, a small win with discipline is more powerful than a massive win with emotion. Because it's stable, it's clean, it's repeatable. That's what compounding really is. Repetition without disruption. It's not just a math formula. It's a psychological state. And the traders who master it don't think in days. They think in years. Because they know that slow is smooth, and smooth becomes fast. So ask yourself, are you here to impress or to last? Because the trader who lasts, the one who walks away not just with profits but with peace, is rarely the one who won big. It's the one who won just enough, just consistently enough, to keep showing up without breaking down. That's real trading. That's your real edge. And it's not exciting, but it's everything. In trading, intelligence is often romanticized. People assume that to win, you must be unusually clever, naturally analytical, mathematically gifted, a kind of genius. The image of a successful trader is often painted as someone with a high IQ, surrounded by monitors, predicting every move with surgical precision. But this image is deeply misleading, because the market does not reward genius. It rewards habit. It rewards a trader who shows up every day, not with brilliance, but with structure, not with flashy predictions, but with boring, disciplined routines. The trader who wins long-term isn't the one who knows the most. It's the one who does the same thing with quiet repetition, regardless of mood, noise, or emotion. Genius in trading is not about intellect. It's about behavior. And the hard truth is, most people don't fail in trading because they don't know enough. They fail because they don't do what they already know consistently. They might understand risk management. They might have a good strategy. They might even have an edge. But they lack one critical thing: habits that support execution under pressure. That's where the entire game is played. Because when money is on the line, when your brain is flooded with adrenaline, when you're 2 trades into a losing streak, that's when your true habits surface. Will you follow your rules or abandon them? Will you journal the trade you regret or bury it and repeat the mistake? Will you walk away when it's time or stay and bleed more? In these moments, your habits either protect you or destroy you. And here's where many traders get it wrong. They try to rely on motivation or passion or emotional spikes to stay focused. But passion fades. Motivation wavers. Habits are what remain. If you've trained yourself to take profits at your target, no matter how greedy you feel, that habit will protect you. If you've trained yourself to size your trades properly before every session, that habit will protect you. If you built a routine of reviewing your trades every weekend, whether you're up or down, that habit will guide your growth. Over time, these small behaviors compound. They create stability. They create trust in yourself. And that self-trust becomes a kind of unshakable internal structure, a trading identity that is based not on hope or emotion, but on self-integrity. Compare that to the genius trader who wins big one week, then blows it all next, because he's relying on intuition over routine. He's guessing instead of journaling. He's skipping setups because he feels smart. But smart doesn't matter when your habits are unstable. You can't outthink the market, but you can outdiscipline it. And that's the deeper truth. Habit beats intelligence every time. Because habit makes you show up even when you're tired, even when you don't feel like trading, even when last week was brutal and doubt is creeping in. Habit is what makes you follow your process anyway. And the market recognizes that. Not in a conscious way, of course. The market isn't a person, but over time, it reacts predictably to structure. The trader with consistent habits gets more consistent outcomes. They don't rely on luck. They rely on their edge being expressed through behavior. They don't panic after a loss. They lean on the system they've trained. They aren't surprised by drawdown. They plan for it. That's the quiet power of habit. It prepares you for chaos before chaos arrives. And here's something else to consider. If you're constantly overwhelmed by trading, if you're confused, overanalyzing, second-guessing every move, it's not a strategy problem. It's a habit problem. Because strong habits simplify decisions. You don't ask yourself, should I trade today? Your schedule tells you. You don't ask, should I close the trade here? Your risk plan already decided. You don't think, maybe I'll double the size this time. Your calculator already gave you the correct lot. You're not wasting emotional energy on constant micro decisions. You're saving that energy for execution. That's how professionals operate. They take human error out of the equation as much as possible. They reduce randomness by increasing routine. And that's something most traders never even consider. They're so focused on what to trade, they never stop to build a structure for how to trade. They're chasing genius when they should be chasing habit. And look, there's nothing wrong with being intelligent, creative, or analytical. Those are all useful traits. But without habit, they collapse under pressure. Without habit, brilliance becomes a liability. It leads to overconfidence, overtrading, overcomplication. The real mastery is boring. It's quiet. It's habit-driven. It's opening your trading journal even after your worst day. It's setting your risk even when you feel this one is going to work. It's closing your charts when your trading window ends, not because you're tired, but because your system says so. This is the behavior the market respects, not the flashy setups, not the clever entries, not the intellectual debates, but the quiet, habitual execution of a plan, because that's what compounds. That's what holds together when everything else breaks. And that's what ultimately separates those who survive from those who burn out. So the next time you feel the urge to figure it all out, pause and ask yourself, what habits am I building right now, even when I don't notice? Because in the end, your habits trade for you, not your knowledge, not your talent, and definitely not your IQ. So what if consistency truly is the real trading edge? What if your breakthrough was never hidden inside a secret indicator, not in a signal group, not in a more complex strategy, but in the mirror, in the quiet, daily decisions you make when no one's watching? Because now you've seen it. Most traders don't fail because of strategy. They fail because they cannot consistently follow what they already know. They chase complexity, but ignore the power of simplicity, repeated with discipline. They look for high returns, but overlook the steady strength of compounding small wins. They try to outsmart the market, but forget the market doesn't reward genius. It rewards habit. Every missed trade, every impulsive loss, every broken plan doesn't point to a broken system. It points to an undisciplined mind. And the only way to change that is not by learning more, but by becoming more consistent. Because in the end, trading isn't about being right. It's about being repeatable. And if you can repeat good habits, good risk, good thinking, good restraint, then you don't just trade better. You evolve, not into a smarter trader, but into a stronger one who lasts. And in this game, that's what really matters.